guys, so another video on break and retest. So looking at the higher time frame to see what the trend is. So we had a huge impulse to the downside. We ended up reversing and buy orders came in, and then now we've been in a really big bull run that we're looking to reverse because we have rejection around 182. So what we're trying to do is we're going to mark up so we can say, and I mean, you can take notes too, like you can take notes in your notebook or wherever you want to say, or wherever you want to do it, and you can say Euro NZD. Oh my God, I can't type today. Euro NZD, you can put daily time frame, going to reverse, or you can say at reversal point, okay? And so you can keep little notes here and there so that you're remembering what exactly is going on. That's also why I recommend trading 1 to 3 pairs, because then you can figure out everything that's happening with those pairs rather than looking at 10 or 20 and then getting confused on which is which and what is happening. It's good to study a pair and then just profit off the whole thing. Anyway, so we're at a reversal level, going down to the 8-hour, obviously the same price action. We're looking to reverse around this number, so it's trying to go past 182, but it's failing to. And so finally we get the first rejection below 182. So it's basically 81,800. So what we would do is mark up our zones. So we would go to the rectangle and we would identify our zones. There's this new tool that I've seen that I haven't even used yet, but it's highlighter. So if you want to highlight it, like this, it's kind of messy, but there's so many different tools now compared to like before. So there's so many things that you can use. So it's honestly really up to you. But anyway, I like using the rectangle tool. So need to change this color. Okay, so we have a rejection here around that number, and then we're looking at areas of interest. Okay, these are our most significant zones, and then even on 1 hour sometimes there'll be these minor zones. So you'll do your most significant areas of interest here, and then you'll drop down to 1 hour, and then you can see obviously these minor zones in between here. So this is something you just want to pay attention to because these matter. More than likely they end up getting broken because they're in the middle of structure, but you still have to understand what's happening and still keep an eye out. Okay, so that's all I'm gonna put. We have a little minor zone here around 180, but I'm just gonna leave it until we get to that point. Okay, so basically what happens is we rejected this price around 187. So two things that can happen. It can come down here again, test this level and reverse, or what it can do is it's correcting right now and it can just go up from here, test that high one more time, or end up breaking structure and going to the low. So that's kind of what our analysis is for the week. We can see that it is rejecting on the daily time frame. It might go up a bit further, but again, we're looking for a sell. So when we are looking at break and retest, for example, we see here that we have a W pattern. The W's work best when they're at this main structure, when they're at major support, okay? Because of the fact that you can tell that, okay, this price broke, this tested twice, and then it continued up. So this is the impulse leg with the W, then we get the retest, and then we have a confirmation of a bull run. Okay, so that's what's really important. So that's why if you miss the original entry on the bottom, you want to wait for that retest. You don't want to just get in, because sometimes you can get stopped out, or it ends up being a fake move. So you really, really have to be patient. The strategy is very simple and easy and very effective, obviously, and accurate, but it does come with practice and experience, and the most important thing is patience. So okay, so now we're seeing how it reacts around this area to see if we go to the highs. And by the way, I like to go back in the market and rewind and show you guys, because this is how you need to be back testing. And also, like, it's not fair if I just mark up things that already are presented. Like, this is easy, you know what I mean? Like, I like to go through it and all and show you exactly what's happening, but I like to also go through live examples that are happening, right? Because then you're not going to learn. So, okay, so it comes back up to that high. Okay, so it comes back to this high. So right here we can see that it didn't, so it tried to test 81.9 and it didn't break above, so it stayed below that 182. So looking at this for an entry perspective, going to highlight it and drop down to the 15-minute time frame. And we can see exactly this. Okay, so this is our original. It tried to break above, couldn't break above, tested 81.9, dropped. So anywhere around this number, anywhere around this range is where we could have took an entry. So it's staying below that 81.8 level. Okay, so it's staying below. It couldn't reach up to 182. It's closing below. So our entry could be anywhere in this area. And just to get, and when you're dropping down on the lower time frames, you can just get a precise entry and a like tight stop. So you just put it above structure. Okay. So even when you're going down on, let's say, the 5-minute, for example. Oh, I can't do that. Never mind. Gotta go back and find this. Sorry, guys. Hate when it does this. Okay, so we were here. Okay, so when you're on the 5-minute, obviously I can't see it because the data doesn't allow me, but when you're on the 5-minute, you can even get a more precise entry. So looking at the 15-minute, like I said, it's clearly not going above. It tried to test, tried to break above, then test. So anywhere around this number is where you can take an entry with your stop loss above. Okay, so just stop loss above, right above this wick. And like I said, when you go on the 5-minute, or there's some people that like trading the 1-minute, it can be like a 5 to 8 pip stop, because we already had this price happen. So the market makers aren't going to move price past this level. So for example, like when we're looking at the higher time frames, we're looking to see, okay, where's our first target? Well, our first target is here. Okay, so now we're watching to see, which was a almost a 1 to 8. So now we're looking to see, okay, if this ends up breaking, then it's going to break, test, and continue down. Okay, so if you miss this original entry, price needs to break structure. It needs to break. It'll come up and correct, and then you can take it here to go to continue down. Okay. Okay, so let's see what happens next. Okay, so it's struggling to break this price. Okay, so it finally ends up breaking. So it struggled there, then eventually dropped down. So now we're looking at this level right here. So this is a minor on the 1 hour. Okay, so see, it ended up breaking price, and imagine if you're just like, okay, I'm gonna sell. Well, it ends up correcting all the way back up to structure that's 100 pips, and then you're out. So you have to enter at a specific level. And like I said, when you drop down on the 15-minute time frame or lower, you can see all this price action happening, and you can focus on the number. So what ended up happening realistically is it ended up breaking 181, which is a round number. It came up, tried to test, tried to break above, ended up exhausting, and then completely breaking back down to structure. Okay, so then looking at the 1 hour time frame, now we're looking to see, okay, finally we're getting this retest of structure. So it's gonna either go like this and back down to the low, or it's going to break to the high again. Okay, so now it's consolidating, breaking out, and we're going to the high again. Okay, so if it's going to break above 182, we're going to get a strong bullish candle like this, and then we're going to get a test, and it's going to continue higher. But you have to remember that on the daily time frame, we can see that this is a heavy level of rejection and reversal. Okay, so since we've been in such an impulse for such a long time, more than likely it's going to reverse. So that's the kind of stuff that you need to pay attention to. So let's say, for example, too, like let's say, okay, so this is closing below 180. It comes in wicks at 79, so half of that price, then ends up closing and then goes above 180 again. So for example, like let's say you even miss this correction and you're like, okay, like I'll wait for the buy or whatever you want to do. You would have, the reason why it's testing this price is because this price never got retested. So it's coming back down here and then going up further. So even this, but you got to understand that we're at a heavy reversal. So obviously we're in a bullish trend right now, but if we respect that number, it's obviously going to turn the other way. So we have to always measure to see, is this trade worth it? Which in this sense it was. It's 200 pips. So, I mean, by all means, you can take trades against the trend in any situation. Like for example, like we're in a bullish trend. If you took this trade, that's against the trend, right? So that was 200 pips. That's worth it. But you always have to check your setup and your RR just to make sure that it's worth it. Okay, so this is a great example of the market makers. So basically what happened is the market makers manipulated price because they're collecting their losing positions before they end up reversing the market. Okay, so if they're in a loss, they're trying to absorb as many orders as possible, and then what ends up happening is they get these buys in, and people are like, okay, it's gonna break, and so many orders get in for buys, and then they reverse the market, correct it, and then continue down. So that's how people get caught. So you have to wait for that final confirmation. So highlighting this, dropping down to 15, you can also see kind of like a double top pattern. So this is what I mean, like on the 4 hour time frame, you see this. So you can see how they push it up and then came down and then continued. With false breakouts, by the way, false breakouts are just when the market makers are basically pushing it into a direction where you think that, okay, it's going to go above this structure, but then they end up closing it. So false breakouts is just like a movement above this structure that's breaking out, but then actually it comes down below that number. So you got to think back to like what the banks are doing. That's the biggest thing. I try to keep it as simple as possible, but just in like bank terms, basically, like I said, what they're doing is they're trying to make up for their lost positions. They're absorbing so many orders to take that, and then they're pushing the market in the opposite way. But we already knew that because looking at the daily time frame, there's so much reversal in this area. We had a huge impulse. The market has to correct itself. That's how I get so many of my trades, because I focus on that. And why I'm accurate in that way is because I'm very patient, honestly. And that took me a while. That took me many years, but eventually you get to that point and it starts to pay off big. Okay, so let me just highlight this. So on the 4-hour time frame, like never take entries on the 4-hour time frame because of the fact that there's too much information in this candle. And so 1 hour is fine, but like 1 hour here basically made a double top, and the M leg impulsed, we had a correction, and then a continuation down, right? So that worked out really well. But the lower you go, the better the entry and the better the stop loss you can get. So what I would do is, for example, taking an entry off the structure, we can see, okay, it rejected in here, and then it rejected one more time. So it's basically respecting 82.2, okay? So the biggest thing is it's not going above, there's no price action. It tried to break, then closed, then came up, and then closed once more, okay? So anywhere, like I said, around this number is where you could take that precise entry, and then once it does this, it's not going any higher. It's reversing, okay? And especially when you see this on the 1 hour and the 4 hour, you can see, okay, they're clearly absorbing orders, and then they're going to push the market down. Once it hits that level, they're not going back to it. So you can put your stop loss as tight as you want, to be honest. So then, again, same concept. You're looking to the left and saying, okay, well, where's my target? Your first target would be here. Okay, so it's literally just a repetitive cycle is really what it is. But the basis of it is that you don't want to just enter wherever in the market. So that's the biggest thing. Okay, so it comes up to test. Dragging this here. So then when we look on the 1 hour, we can see that it's basically testing this price. Okay, so price ended up breaking. So price broke 81. Again, it's a round number. The full numbers are really, really important. And so there was no retest here. It comes back and retest. Banks pull it up, then reverse it, one more test, and then continuation. Okay. So sometimes this will happen where like price breaks and you get in on that retest correction. So you get in right here, and then you can see that the market, your first TP would be here, obviously, but then you see that the market is consolidating. I mean, that's up to you if you want to, like once the trade is trending, I always put my stop loss at break even, always, because that way you're either going to break even or you're going to win. So there's no loss. So that's a great thing to follow. But sometimes it'll test once, twice, or 3 times. So you just got to be prepared for that. That's why it's great to enter at the major of structure, which is what I always preach about. But it is you have to understand what's happening, and you have to be prepared and patient for it. That's why I like setting alerts on TradingView, because then when it gets to that specific price and I know it's a heavy reversal, especially looking on the daily time frame, it's worth taking the trade. Like you get a huge RR and you don't have to worry about getting in on that correction. But yeah, sometimes when you get in on the correction phase, like when you're getting in on the break and then the test phase, the problem is that sometimes it'll test multiple times, and that happens. But you gotta be patient, and you just gotta follow what's happening. The trend is obviously a reversal, so as long as it doesn't break above structure, it'll come down. So it's at the structure one more time. Eventually this is going to break because it's been tested so many times. So let's see. Okay, yeah, it completely breaks. Okay, so same thing. We ended up breaking. There was no correction here. It literally just keeps falling, okay? So looking at the structure, like let's say we looked at over here, we can see this on the 15-minute, how it reacted. So it ended up breaking, testing, continuing down, then it ended up breaking, testing. Your entry to take this down can be here. Right at structure, put your stop loss right above, and then carry it down. This would be your first TP, so on and so on. So always like focus on the higher time frames for the trend and stuff like that, but then take advantage of the lower time frames for your entries because they can be so precise and you're not going to miss out on that full move, right? But just make sure you're taking it at a specific structure. So you're not taking it in the middle where it doesn't make sense. You're taking it at a specific number and at a specific zone. Okay, so I hope that made sense. I'm going to do one more break and retest video. I probably won't talk in it. I'll probably just do music or something like that, and then you can just follow along. But I hope this makes sense, and I hope it helps.